Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, keep in mind that there's risk involved with each trade that you take, so you want to make sure you manage risk in a way that makes sense for you, and we'll go over some ideas in that regard if we simulate a trade or two. There's some nice tools built into our web trader and app within the order window that makes the risk management side of things quite a bit easier. From the perspective of education, keep in mind that we're not coming from a financial advisement perspective within the webinars. Now, from our main website, we can log into the web trader platform, which allows you to trade on both MT4 and MT5 accounts from one location, and also with the advanced functionalities that you'll find both in our app and web trader. So if we log in here in the upper right corner, we'll be in the web trader platform. Now, before we get into today's fundamental announcements and news, we can talk about what's happened so far this week. It's been pretty active, a lot of movement on the markets with the news that's really each day coming in. And a lot of it has to do with the tariffs that the U.S. is implementing pretty much globally with different countries, and the trade deals that are being struck to ward off some of those tariffs. And so we've had deals this week announced with multiple countries between the U.S. and countries like Japan, also the European Union, which obviously involves a number of countries. And on it goes with the negotiations between the Trump administration and various countries. We're looking at, I think, South Korea. They just announced a little while ago had another trade deal signed with the U.S. and all eyes are on China, I think, right now, and perhaps also the U.K. To see what the finalization of any deals might be. Maybe this week even, who knows, even today perhaps, as fast as some of these things seem to move lately. So those trade deals in general, as they're announced, create optimism on the markets. They've served as kind of a bullish movement to create upward movement and new highs on many of the indices, and especially the US indices. Now, beyond that, we also have had some data come in out of the US showing the economy is doing well, but also certain segments like the housing sector are lagging behind. And a lot of that could be due to the high interest rates still in the US. And unfortunately for those who are paying interest on credit cards and home loans and looking to refinance or buy new homes in the U.S., the FOMC committee and Jerome Powell specifically decided last night not to lower rates again with the rate decision. And so the rates remain quite elevated in the U.S., creating some apprehension on the markets a bit after that announcement coming into today. But I think the bullish sentiment is still there. But we've got to keep an eye on the latest developments with the trade and tariff negotiations between the U.S. and various countries. Now, with that said, we can then take a look at some specific announcements that are still yet to come on the economic calendar. So, you know, the data out of the U.S. has been strong, as I kind of alluded to. Except for maybe the housing sector. Inflation has come in lower than expected multiple times as well, which has created some encouraging responses on the markets. But then we take a look at today and tomorrow with new data coming in that obviously could shift the momentum. And let's go to today first on the calendar. And what we'll see is upcoming, a number of announcements have already come in Asia and Europe and the UK. We still have inflation rate data coming in out of Germany. And so if we take a look at the year-over-year inflation rate and the month-over-month inflation rate, we can see how has this caused movement on the various currency pairings in the past, and then move forward to see what kind of plan could you have as this data comes in today. And so the expectation is a dip below 2% on the year-over-year inflation rate. We'll see if that happens. What has happened in the past if the numbers come in at the expected rate? If it matches the forecast, what we see is the prediction is 50-50. It's happened twice. Once the Euro USD went up one time and it went down one time. That's over the past year that the inflation data has come in at the expected rate, which in this case would be a slight decrease below 2% on the inflation rate year over year. We can look at different currency pairings. With the drop down, we'll stick with the Euro USD, and we can look at different time settings into the past. But at 4 hours after each of these events, one was up and one was down. So that doesn't lend much predictability to it. But what if the data comes in higher than expected or lower than expected? Then that's when you tend to get a larger reaction. So if the inflation rate comes in above forecast, higher inflation than expected, what we see is the euro weakens 2/3 of the time. Now we have some significant data that 2/3 of the time, approximately, the euro will weaken if the inflation data comes in higher than expected. And that makes sense. High inflation means the currency is getting weaker. It means prices are rising. You need more of the currency to buy the same thing when there's high inflation. And so if inflation comes in above forecast, it makes sense in a logical perspective. And then also you can see it on the charts. The majority of the time, the euro would weaken against the USD in the hours following that data if it comes in higher than expected. Okay, and you can see the average range movement, 47 pips or so after 4 hours. And you can also look and say, well, what about in the first 5 minutes or so? Most of them spiked up with a false move. Okay, 83% of them in the first 5 minutes, you could have caught a high point or very little dropping, just a couple pips. And then after 4 hours, the majority of them are down. Okay, with 2/3 of the time you'd be profitable. So it's a matter of managing your entry point and exit point. But if you catch this type of percentage with inflation data coming in high, and obviously you don't win every time, but if you could win 2/3 of the time, that's a profitable strategy then. Okay, and this is what we would call data-driven trading. So what we're looking at then is above forecast. It looks like a statistical advantage to sell here. If it comes in below forecast, it's 50-50. It's happened 4 times in the past year or so, and twice the data shows that the euro strengthened and twice it weakened. So there's less of a predictable response if this comes in below forecast. But if it comes in above forecast, it seems to be more predictable. Okay, and so this is an announcement where I might be sitting and waiting to see how does this data come in, and I'd be ready to trade maybe if it comes in the direction that showed the statistical advantage from the past. Okay, and you could check month over month on the inflation rate as well. Likely that data is going to be very similar, but you also could take the time to look through that as well. Okay, and by the way, if you have any questions as we go along, feel free to ask them. I'll keep an eye on the chat box. No, sorry, I'm only speaking English. Apologies. If you're looking for a different language webinar, we do offer them multiple languages. Just take a look at our main website in the webinar section to get registered. Okay, so what about out of the US? We've got a slew of data coming out. We can look at initial jobless claims, personal income, all of these listed as high-level announcements, meaning they have a large effect on the price movements of the currencies. We'll look at initial jobless claims maybe as an example, because there's been a big focus on jobs as the economy's been improving to see, well, what's happening with jobs. So this number, initial jobless claims, means the higher that number is, the worse the news, right? It's not hiring, it's people losing their jobs. So initial jobless claims, higher than expected is bad news and lower than expected is good economic news. So if we just look at all of them, it's 50-50. 6 up, 6 down. But if we qualify it, and again, you can pick the currency pairing you want and the time frame you want. If we qualify this and say, well, what if the data comes in worse than expected, above forecast, meaning more people filing jobless claims than expected, then all of a sudden we see the USD weakens two-thirds of the time with the euro climbing, 67%, 2 out of 3 times up. Now I'd like to see more data points than that, but at least we have something. If it was 4 out of 5 times instead of 2 out of 3, it might be the same percentage, but then you'd have more confidence. But in any event, what we see here is 2/3 of the time, with the 3 times that this has happened, the euro climbs against the USD if there's bad news on the initial jobless claims, if it comes in higher than expected. And logically speaking, that's what you might expect, that the USD would weaken if there's bad economic news. And so that's what we see here. What if it comes in the other way? And before we look at the other option, you see it's gone 67.8 pips average range movement after 4 hours. In the first 5 minutes, we're looking at 17 pips range movement. So if you can catch either a spike down or a small rise and you expect it to go much further after 4 hours, this one going almost 80 pips, then the profitability compared to risk could be a good setup for you to just get your stop loss down into the negative with a larger take profit, potentially, depending on your entry point when we see the average range movements. Okay, and then the percent directionality, 2/3 in one direction. So you can go through the announcement schedule like this for each week, maybe over the weekend for the upcoming week, and pick the announcements that, number one, fit your schedule, that you're available to watch the numbers as they come in, and they'll be posted here the minute that this time hits. You'll see the actual data come in. So you want to be available for this type of strategy to see the data come in and then make the trades that make sense based on your analyzation of the past data. Okay, and we could also look at the Canadian announcement, GDP. This one a lot of times has high predictability. If this comes in above forecast for Canadian GDP, we've got 75% of the time the Canadian strengthens against the USD. That makes a lot of sense, right? The Canadian, you would think, would strengthen if their GDP numbers were better than expected, above forecast. So 75% of the time it strengthens against the USD. You can also look against other currency pairings. Against the yen, it's 50-50. It's less predictable. Against the USD, you see better predictability. And so you can go through different currency pairings and see which ones seem to have the best predictability. And 75% predictability based on the past data seems pretty good if you can win 75% of the time. And what if this came in below forecast? Well, then it's 60%, it went up. That's not as convincing to me, 60-40, it's 3-2. One different, and it would look like 60% down. So I'm not as convinced about this data if it comes in below forecast, but if it comes in above forecast, I feel a little better that maybe if I can catch a good entry point, I might go after a sell on this with the Canadian maybe expected to strengthen, just looking to get the right entry point then. Okay, I'll pause for a moment. Any questions on anything we've covered so far? Okay, if I see any questions pop up, I'll address them. And we can obviously take a look at tomorrow. What's happening tomorrow is we're moving into the non-farm payroll announcement. So typically the first Friday of every month, the non-farm payroll numbers come in. And most traders view the non-farm payroll announcement out of the US as, if not the biggest, one of the biggest data releases each month. And so this comes out once a month. It shows the job hiring situation in the US or lack thereof. And we see the last numbers were 147,000, which actually I think were better than expected this last month. And now we're looking at an expectation of less than that of 110,000. So you wonder if maybe it's being under predicted again, and these numbers could come out better than expected, but we'll see. I know with a lot of what's gone on in the US with giving incentives for companies to come to the US to build their factories, lower taxes now with the tax package that was passed recently in the US, lower corporate taxes, less regulations, less cost, et cetera, for businesses. It's possible that these numbers could exceed the expectation once again, but we'll see. If we look at the data, what does the data show us? And sometimes it's a little easier to look 1 hour after with this announcement because there's such rapid movement after the announcement on the charts. And so if this comes in above forecast, more jobs than expected, we can see 75% of the time then the USD strengthens, and we're talking over 60 pips average movement in that first hour, with the ones that went up going up much less, and the ones that went down on average going down larger. So short stop loss, longer take profit. It looks like in the past, if you get a good entry point, when this data comes in above forecast, in that first hour, the majority of the time you would have been profitable. Okay. As this goes out further, 4 hours, I think the movements became so erratic that this pictorial representation has a glitch on the 4 hour time frame. So we'll look at 1 hour as the longest time period. We're looking at over 60 pip average range movement. And as we go down to 30 minutes, we've got 53 pip range movement, still high predictability, 88% down. 15 minutes after the announcement, high predictability, 75% down, 50 pip movement in that first 15 minutes, the majority of that down. After 5 minutes, 41 pip movement, and again, the majority of it down. So the distance is less and less if you get in quicker. The 5 minutes compared to the 30 minutes, the 45 minutes, the 1 hour time frame. So the idea here is it doesn't take 5 minutes to place a trade, but within 5 minutes, the average range movement was already 41 pips. But a number of those spike up before they go down. So if you have your trade ready, this comes in above forecast, you're just waiting for the movement to give you an entry point you like for the direction that you think statistically it says you should trade. And obviously you wait for the entry point in those first few minutes to see if you can get that to then go after what you think could be the longer term movement, okay? And if this comes in below forecast, well then now we see the opposite. 75% of the time we have upward movement. It doesn't look as strong distance-wise, but one of these did go about 60, 70 pips, but very little downward movement. And so if we start to look at the shorter time frames, it's a little more even, upward and downward distance, 31 pip average range movement, and after an hour, we're looking at 48 pip average movement. So it's a little tricky to trade on this non-farm payroll announcement. The directionality in general seems very predictable based on that data, but the movement is quick after the non-farm payroll data comes in. So you want to be selective and maybe patient for things to stop spiking around in the first minute or so, and then see if you can catch the entry point that makes sense for you based on how the numbers come in, okay? So just be careful with the non-farm payroll announcement. I tend to not recommend pending orders, buy stops, sell stops, pending orders. You have a lot of slippage when this data first comes in. You have huge movements on the charts in fractions of a second. So my recommendation is let the smoke clear a bit in the first minute or two and then decide if the data-driven trading makes sense with the entry point or not, okay? There are different ways to trade the announcement. I'm not saying that's the only way, but just be careful. There's a lot of quick movement with these numbers as they first come in, okay? And we can go down and take a look. There are other announcements, manufacturing data, etc. So a lot of opportunity to look at data for the upcoming week each week, if you're maybe taking some time on the weekend to do that, and pick out the announcements you like best. And if you try each announcement, they're repetitive each week, each month, try each one 5, 10 times and see which ones you have the most success with. And you might find yourself a couple good ones that can be part of your set of strategies then long-term for trading. Okay, now what else can we look at here is some of the other fundamental news trading tools, and we can take a look at the market buzz in particular. And on any instrument that we offer, we can find the most recent news. Okay, so instead of relying on someone else to tell you what's going on with Meta platforms or NVIDIA or whatever it is you're interested in, you can just come here and check. Okay, and it's not just the stocks; it's also currency pairings, cryptos, commodities, etc., that you can look at using this tool. So maybe you see something that catches your eye, something you're not usually interested in, but you say, okay, why is AMD, Advanced Micro Devices, all of a sudden has 695 mentions online? So you click it and you can take a look and see what's happening here. You know, NVIDIA, these others, they're always up there trending the most, but all of a sudden a name maybe catches your eye that isn't usually there. So you take a look and you say, wow, the prediction here is the price might rise over 15%. If you click on that, it'll give you the technical signal, the technical analysis as well, and it shows you the take profit zone up here that it thinks this movement might reach, and it shows you where the support and resistance levels are here as well. So the technical signal is there for you if you want to analyze that. Right now they're saying buy from a technical perspective. Then you can check and see, does the fundamental news that's occurred most recently support that idea? Or does it work against this technical signal? And so I can see right away, Advanced Micro Devices Incorporated on fire due to AI. Well, that sounds pretty positive. So you could click the link, read the summary, also read the entire article if you want, straight from the source, and decide what's the most recent news about this company, and am I interested in buying on it or not? Okay, and so you can make up your mind pretty quick with what might take you otherwise hours of time to find this information. It's right here organized for you. This article came out just 2 hours ago. Looks like good news for Advanced Micro Devices if you read that article. You can scroll down and find more. 6 hours ago, UBS raises Advanced Micro Devices price target to 210 on strong PC and server performance. Okay, again, good news for a different reason. So if you start reading multiple articles that start to convince you, wow, this company really has a lot of good news in the past 2 hours, the past 6 hours that's come out, or even if it's in the past 24 or 48 hours. So then you might make up your mind that, hey, I trust this technical signal. So in this case, since it's a US stock, it's not tradable yet, but once the US market opens, you take a look and you see, do you like the entry price that's available? If not, maybe you use a pending order, and you make an informed decision from a fundamental perspective to then go ahead and make a trade. Okay, and with the help of the technical signal, you can decide maybe what your price target might be for take profit and where you might put your stop loss below the support levels, perhaps. Okay, so very simple to do your fundamental news research. Now, real quick, I want to show you. Maybe you've decided that you think based on the non-rate cut yesterday out of the U.S. Maybe you decide that you think, maybe the USD could be bullish moving forward because there's no anticipation of any immediate rate cuts in the US. And so maybe that could cause the USD to be a bit stronger from a fundamental perspective. So then you start to take a look and say, all right, maybe I think the US dollar, there's been a lot of good economic news. The markets are rising, so it seems fear is down, but maybe the US dollar has reason to strengthen from a fundamental perspective. So you start to think, okay, USD might strengthen. If fear is down, then maybe Japanese yen is a good pairing because the yen tends to be a safe haven currency. So you try and pair together instruments or assets against each other that maybe one is a strong horse and one is a weak horse from a fundamental perspective. Okay, so if you think the USD, for example, has reason to be strong because of the non-rate cut yesterday and the talk about fears about the tariffs and the effect on them, this is what Jerome Powell was speaking about yesterday when they decided not to lower the interest rate in the US, that's the reason, that there's still this tariff war situation, and he's not in any hurry to cut rates because of that. And so if that makes you think the USD could be stronger then, but the markets are rising and you think the yen has reason to be weak because there's not the fear of economic crash or something, then perhaps that's the pairing that makes sense to you. So then you bring that up, and there are a couple things you can do. You can check the technical signal. So technical signal is a buy. It doesn't surprise me because I was already thinking there's reason for the USD to be stronger because they didn't cut the rate yesterday. And it sounds like they might not be cutting the rate anytime soon, perhaps. And then at the same time, the markets keep rising. So it seems fear is down. So the safe haven yen has reason to be weak. So there we go. And it's already hit the take profit zone. So you can see right there, before I ever looked at the signal, from the fundamental news, you could already pick in your mind what direction you think it might be moving, right? And then we look at the signal, and sure enough, it was a buy signal. It was breaking out through the resistance, and it already hit the take profit zone, okay? And it warns you right here, the market has already reached the key level. It's already gone up. The signal was already successful. So if you combine your understanding of the current fundamental news and then look at our technical signals, you can see how much more successful you can be. And had you looked at this movement and this signal a few hours ago, you'd already been in a profitable trade that you could close, okay? Because we already knew everything I just talked about, we already knew this morning, okay? It's not like it just happened. Already knew there was reason for the USD to strengthen from last night. And we already knew there's reason maybe for the yen to weaken. So it just carried out in the past hours, and there you go with an easy profit to follow that signal. And it's interesting because a lot of times I have clients ask, how come your signals aren't successful more? I lose as much as I win. And my answer is you should qualify which signals you're going to follow based on what's the most recent fundamental news. And if you can align the signals with the most recent fundamental news and only trade on those that are supported by the most recent fundamental news, then more times than not, you should be able to have this type of result. Okay, a successful signal perhaps. Any questions, comments on anything we've covered so far? I'll pause again for a moment. Yeah, Michael, the risk management side of things, very simple. So let's assume you were going to buy on this, that we're back in time 6 hours and the signal was newer and you already understood the current fundamental news setup that we discussed and you wanted to buy on this and you wanted to know, okay, what's my risk? Very simple. You put your take profit at a spot that makes sense to you. Let's say you were putting it up at, I don't know, 150 and a half. And you'd use maybe the technical signal to determine where your take profit would be, or you could look at the chart yourself. And stop loss, you come down and you decide maybe I want it at 149.75. Okay, and you'd look at the chart, look at the technical analysis to decide where you'd want your take profit and stop loss over here. And I'm just kind of doing a mock trade here just to show you the risk management part. So once you have your entry points and exit points set up on your trade, now you can see it's telling me what my possible profit and possible loss is. And if I'm willing to risk, I don't know, 500 a trade, then I say, okay, this is only risking 61 with this trade size. So I could go ahead and take a trade of maybe 2 lots, and now I'm risking 270. So maybe I go 5 lots. And right away, it's calculating what my risk and potential profit would be. And so, if I wanted to risk a certain amount, let's say 1% of my account, then I would want to risk around 565 with this account balance. And so I would know, okay, this is a little more than that. So now I need to maybe just go a little smaller on my trade size and say maybe 4.5 lots. And now I'm risking closer to that number, and you just adjust your trade size until you get to the spot that makes sense for your risk tolerance. So now I'm closer to 1%. I'm going after near 2.5%, 3% potential profit. And if I like the setup, then I click buy. So the risk management is very simple with our web trader and our app. Okay, I think this is a good place to stop. I want to leave you all enough time before the announcements come in to get yourselves ready. I think some of those announcements have some pretty predictable movements from the past data, depending on how the data comes in. So take a look at those, and maybe you can start trying to use that type of strategy. And maybe when the US market opens, you take a look at AMD or some of those other stocks that were listed there after you read the most recent articles to get an idea of what direction you think that movement might go. Okay. All right, everybody, thank you for joining, and good luck with your trading the rest of the week.